Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba, and thanks for joining me. Tonight, I'm joined by Esili Eigbe, Director and Head of West Africa Research at Exotix, for a closer look at the consumer and East African market. Esili, thank you for joining us on the show. Let's start with the good news. Let's take a look at the last decade. Certainly, the consumer on the continent as a whole has been a key driver for several industries.
That is correct, and it's primarily been on the back of growth in household income. If you obviously, take a step back and look at the trend there, there has been a significant growth in that area. In fact, in most economies, you've seen that double over the last 10 years to 15 years. And that has essentially allowed for, growth in household spending, the prosperity in quite a number of consumer-related companies. Now, what we've obviously had more recent times is clearly a reflection of the global economy, which is a relatively weaker position and has translated into a weakness in commodity prices. You obviously remember that African countries are predominantly or quite dependent on export of commodities. Now that those commodity prices are relatively weak, that has had a negative impact on the economies and essentially consumer spending. And that is why things have weakened a lot more than they were probably 2-3 years ago.
If we look at the underlying health of the consumer, around the world, certain consumers are highly indebted. What does that picture look like on the continent?
In Africa, it's relatively low. If you had to look at how much of a bank's total loan book on average is obviously going out to, I'd say, funding consumer spending or retail, consumer retail, as I guess some banks would classify it. In Africa, on average, I reckon that number is probably less than 5% or just thereabout. So it honestly hasn't been a driver for the growth, as maybe some people would allude to. The pure driver, as I did point out again, is actual growth in household income, cash household income.
Right. And if we take a look 10 years into the future, what does the dynamic over the next decade likely look like for the African consumer?
Well, we're still very optimistic on the African consumer, and I'd like to point out that, in the long term, the biggest winners or biggest set of investors are usually the strategic investors. So these are typically the multinational corporates who are investing and still investing in Africa despite some of the challenges that we've discussed here. So one of the big highlights I recall was a relatively sizable deal, $400 million deal signed by Kellogg's and the Toleram Group, Multipro, with respect to its Multipro sort of retail outlets in Nigeria, and that obviously goes to emphasize how they find the opportunity or how they look at the opportunity in Africa. In a lot of aspects, a lot of sectors, consumption is still very low in Africa. Penetration is still very weak, and people or the mark. What we do expect is that as household income continues to increase, obviously bearing in mind that on average African households are relatively poor. As household income continues to improve, so would spending as well. So a lot of these companies are essentially investing now, in most cases because they do believe in that positive outlook as we do, and in some cases because they've probably found a few assets that are relatively cheap at this stage to absorb or buy.
So would it be a fair assessment that the really shrewd investors are the ones who are acquiring assets right now for the long term?
That is correct. But I said I still believe that the underlying driver itself is the fact that they believe very firmly in the future of Africa and the ability for consumption spend to begin to accelerate at some point again in the future. Our guess is probably the earliest stage would be maybe some point in 2017. Having said that, I guess it's not all gloomy in all markets, okay? So whilst Nigeria is obviously taking its bit of sort of pounding, in markets like East Africa, I would say that the trend has been a lot more favorable and positive. We've also got the same dynamic as well in North Africa, but in general, I believe that the situation in East Africa is probably the best amongst the different markets in the region that we cover. So markets of Kenya, Rwanda, Tanzania, particularly.
Okay, let's touch a little bit on East Africa. What are the industries that are really benefiting from this hold up in consumer spending?
Well, that's a good question. I think the way to look at it is more which sectors are defensive, I guess, to the environment. So I'm not saying that East Africa doesn't have its struggles. Most countries, for example, last year witnessed a significant devaluation in consumer spending, in their currencies.
Right.
And that has in some ways led to a weakening in consumer spending. Obviously, to fight the relatively weak government revenues, a number of governments in these markets have had to raise taxes, also negatively impacting consumer.
Right.
But we've seen a much more resilient consumer in the markets, I believe, of Kenya, Tanzania, and also in Nairobi, mainly because, over the last few years, the taxes have been relatively high. We've seen quite, consistent increases in taxes, such that, in the current environment, current year, the consumer is cycling a much sort of a much lower base, relatively speaking, and so his capacity to spend is much better than his peers, for example, in Nigeria, where the consumer is only just going through that phase of adjusting to relatively higher taxes, or maybe just a weaker macroeconomic environment.
Right.
And so we're seeing, I think, the spending environment there a lot more healthier than we're seeing in West Africa, for example, particularly Nigeria.
One of the companies.
So to be very direct, sorry, with your question, you want to focus a lot more on sort of the beer sectors, tobacco.
Right.
And if you actually look at the trends in those markets, tobacco, beer stocks have actually done relatively better than their other peers.
Yeah, let's drill into beer stocks. East African Brewery is certainly one that operationally seems to be doing well in this environment.
Well, I think that for one, EABL has benefited from the fact that, consumption of beer is somewhat resilient to economic dynamics or macroeconomic dynamics. And so what we've seen is, I would say, some sense of growth, across the board, much better than I guess we would have expected. On one hand, you have relatively strong growth in sort of the premium segment. You had a bit of a decline in the mainstream segment, but nonetheless, relatively strong growth in affordable beer. To be particular, we've seen about over 100% growth in Senator Keg, which is essentially a low-priced beer entry point within Kenya that EABL began producing around 2004 as a way to increase the consumption of formal beer and discourage, obviously, the home brew market.
So the moral of the story is, when times are tough, people certainly look like they drink beer.
I wouldn't put it that way. I think the way to look at it is that if you are sort of stuck in a habit, if you got the habit. I mean, you, for example, if you probably like to go watch movies every Friday.
Sure.
I'm not sure that a 50% increase in the ticketing would change that habit. So the same way, if you hang out with your buddies every Friday to have, 1 or 2 bottles of beer, it's unlikely that habit changes, mainly because the price of beer has gone up,
Sure.
20-30%.
Sure. You touched a little bit on Senator. What is that business unit or that brand done for margins across the group?
Well, it's not a margin enhancing brand, if that's what you're trying to suggest. It's a low price beer, which implies also that the margins are lower than I guess what I call bottled affordable beer and also core mainstream beer. But again, it's all beer as well, which means that as the brewer gradually accumulates volume in that particular brand, it can over time, improve the margins of that particular product.
Sure.
But I think that from where EABL currently is, it's still quite far to, I guess, getting those margins closer to where mainstream beer margins currently are. And it probably never would. But, I think that with the kind of incentives that the company is getting from the government, you've got about roughly 90% remissions on the product on excise duty. I think it really helps to make the economics a lot better than if they weren't getting tax incentives at all.
The operational case sounds particularly strong. The investment case, is it as strong given valuations?
That's quite interesting. EABL, I would say, isn't particularly cheap. It's not a cheap stock. Okay, we're looking at 2016 PE, just over 20 times. In today's context, African consumer companies where companies have taken quite a beating in 2015 and 2016 as well. It's really difficult to say that the stock is cheap. However, I think given the company's prospects, and the growth we've seen in the current year and ultimately its full year 2016, I think that those numbers are relatively cheap. Just to highlight our investment case on the company, we do believe that the prospects for growth in Kenya are particularly strong. That the company also has the capacity to play in markets of Uganda and Tanzania. Obviously, those markets aren't doing as great as Kenya at the moment, but potentially could become equally strong and profitable businesses in time, particularly Tanzania. Makes us very strong buyers of that business. One major focus for EABL at the moment is developing the local supply chain in Tanzania and Uganda, particularly because there is quite a discriminatory excise duty regime. What I mean by that is, if you're producing beer using locally sourced raw materials in Tanzania, you're charged about half the excise duty you'd be charged if you're importing the bulk of that raw materials. So players like EABL in Tanzania, for example, or at the moment, import the bulk of their raw materials. What they need to do and what they're doing is gradually developing a local supply chain that enables them to fall to a much lower excise duty regime and makes the economics of the business there a lot more profitable. These are the reasons why we like the business, because we do envisage profitability improving significantly in the medium term as some of those plans obviously come to fruition. To add to that, there is probably no other player in East Africa. I would say you can get exposure to both beer and spirits play. The way I tend to see it is that EABL gives you exposure to over 250 million people. That's basically capturing the entire East African population, where as opposed to probably some of the other brewers, that your listeners are probably quite aware of, that have just narrow exposures to a single countries.
Perfect, let's leave it there. Thanks to my guest, Esili Eigbe, Director and Head of West Africa Research at Exotix. That's all from Buy Africa this week. Remember to follow me on Twitter, that's @Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. For myself and the team, goodbye.